Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Electric vehicles continue to be a hot topic, but there are risks out there that I think investors should be aware of. So I have 3 stocks that I think investors should avoid right now in the EV market. That's ChargePoint, Blink Charging, and Fisker. Now, I'm very bullish on electric vehicles long term, but there are some reasons to be skeptical of these stocks, so I want to get into that. The first two I want to highlight are ChargePoint and Blink Charging, and I want to start with this chart. There's a lot of information here, but it starts with revenue on the top. What most people don't realize about ChargePoint and Blink Charging is that most of the revenue that they're generating is from selling electric chargers. It's not from selling electricity at the chargers that are already installed the way that, a gas station would make money by selling gas. They're actually just selling the physical charger. That's a vast majority of the revenue that both companies are making. That's not sustainable long term, and it's a very competitive market. There's no reason to think that a charger is going to be a high margin product. It's really a commodity and something that a lot of different companies make. So keep that in mind with these two companies, that is a big part of their business, is just making a physical charger. The second piece of this chart is net income, or for the case of both of these companies, net losses. You can see that Blink Charging is losing about double what they're generating in revenue. ChargePoint is losing almost as much as it's generating in revenue from a net income basis. That's not a good position to be in for any company, especially as the EV market gets more and more mature. There are tens of thousands of EV chargers out there in the US right now. I don't think this is going to be the kind of growth market that investors might think it's going to be, and it's definitely not a moneymaker at this point in the game. The third is free cash flow. This takes out things that don't cost cash technically, like stock-based compensation, but you can see that cash burn is extremely high at both of these companies as well. $73 million at Blink Charging and $247 million for ChargePoint. So burning through a lot of cash. There's only a limited amount of time you can do that without having to go back to the market and do a stock sale or raise money through debt or something like that. The final thing is their market cap. So this is what investors are paying for from everything above. So companies that are losing money both from net income and a free cash flow statement, still ChargePoint has almost a $4 billion market cap, and Blink Charging has a $660 million market cap. I just don't see any value in those stocks right now, especially in a market where interest rates are rising. Investors are demanding more profitability from companies. These are two electric vehicle related companies that I don't see a path to profitability. So I would simply stay out of these electric vehicle stocks. The third company is Fisker. Now, Fisker is actually a very interesting company in electric vehicles because they're not building their own vehicles. They're using a contract manufacturer, Magna International, to produce their vehicles. They're really just a design and sales company. That could be a really interesting business model long term, but the company needs to prove that it works and proves that it can make money. And that's the reason that I don't think this is a great investment today. You can see here, generated basically no revenue over the last year. Net loss is over $500 million. Free cash flow is negative almost $700 million. So again, these are really big numbers. Now they are spending to build out capacity. They are expecting to deliver some vehicles soon. But again, we have to see that they're able to generate positive free cash flow relatively early in their cycle because they're not building that manufacturing capacity themselves. Now, the price that investors are paying, the market cap is still $2.3 billion at Fisker. So still a very valuable company, or at least investors are paying a high price for it, despite the fact that we don't know whether they can produce a vehicle properly and get their distribution in line. Now, this is a stock that I will definitely keep an eye on over the next few years because I think this is a very interesting business model and a sort of asset-light business model using contract manufacturers. Maybe something that more and more auto companies are going to copy in the future. But until Fisker proves that that asset-light model works, it's a stock that I'm simply going to stay out of and watch from the sidelines. I want to see a company like Fisker succeed. I think that this is an interesting business model for the industry, could actually help lower costs and improve margins long term, take out some of that risk that a lot of manufacturers have by building their own manufacturing plants. but we don't know at this point if it's going to work. That's why I think investors should be very skeptical and just stay on the sidelines. So the 3 electric vehicle stocks that I'm very skeptical of, I think investors should be very wary of right now, are ChargePoint, Blink Charging, and Fisker. What do you think about those 3 stocks? Leave your comments in the comment section below. Follow Arrive Investing. It really helps out the show. Thank you so much for watching, and I will see you here next time.